interested in getting on the property ladder, and potentially you're located in various parts of the country. Some of you may have seen me talk before. I'm Clare Laurie. I'm a sponsor of the Eugenie community for the junior lawyers. I work as a financial planner, which means I sort of help my clients on a sort of one-to-one basis with making sure that their financial plans are designed to fit with whatever is important to them and what they want to achieve in life. I really like working with young professionals because you've got the sort of the key ingredient to sort of making things work, which is time. And so, yeah, that's what we're going to sort of focus on today, is the sort of big ambition that most people have, at least in this country, is getting onto the property ladder. Now, when I need to work with specialists, I usually bring them in, and I'm really pleased to say that I have got Vicky Reynolds, who's joined us. People can see her, probably waving now, who is going to help out with quite a lot of the content today. Vicky is a head of the conveyancing team at Linda Myers law firm in Shrewsbury, and she's actually helping with the conveyancing on my flat right now. We are, like many people, taking advantage of the stamp duty holiday, at least in England, to make a move. So yeah, I know her both as a colleague professionally, but also now helping me personally. So she's great. What we're going to do is we're going to look at a few topics that we hope will be of interest. So obviously stamp duty, what that means for first-time buyers generally, but also what the current stamp duty relief means for you as well. And then sort of, again, coming at it from the first-time buyer's point of view, you know, what buying schemes are available to you, what financing, and thinking also about the different ways that parents or family can help you get on the property ladder as well. And how you can protect any financial gifts. It's not always about sort of having lots of money, but that is one route. I also want to talk a little bit about who's involved when you come to moving or selling or buying or whatever it is. There's a number of different people. And then if we've got time, because I appreciate that's quite a lot, some of the sort of frequent questions that come up for Vicky and me. So Vicky, if that's all right with you, can I hand over to you to get started on perhaps with the stamp duty side of things?
Yes, I hope everybody can hear me. Hello, everybody. It's very strange, as Claire says, when you don't actually know who's listening to you. Yeah, so thank you, Claire, for that introduction. As Claire said, my name's Vicky Reynolds. I head the team at Linda Myers Conveyancing. I am based in Shrewsbury, but we have offices nationally. So we have a large head office in Manchester, we have offices down on the south coast, up in Chester, towards Blackpool as well. So we've got a national covering. And yes, I am going to cover off some of the topics that Claire mentioned there. So we'll look at who's involved in the property transaction. We'll look at the buying schemes that are available. We'll look at stamp duty and also family and parental gifts. So looking firstly then at who's involved in the transaction, it's quite a few people get involved when you're buying a house. So you've got the solicitors, of course, you've got agents, you've got brokers, you've got surveyors, you've got the other side, whether it be selling or buying. So firstly, you've got the solicitors, so us. Your solicitor or conveyancer will carry out all of the legal work in relation to you buying and or selling a property. So that means we're looking at title deeds, we're looking at plans, we're looking at past planning or building regulations issues, any enforcement issues, looking at the searches, and generally collating all of that information, raising inquiries with the seller's solicitors if we need to, and then reporting back to you on the property as a whole. You've also got the estate agent. Now they are involved much earlier on in the transaction. So when you're negotiating on price or other aspects of the transaction, they'll then put together a memorandum of sale or heads of terms, produce that and send that out to all of the solicitors and the clients. And then they really just sales chase through the transaction. So they're chasing up outstanding mortgage offers, outstanding searches, outstanding replies to inquiries. So they get involved during the transaction on a much lesser scale. They're really involved at the start. You've got your broker, of course, who looks at getting the best mortgage product for you, putting your mortgage application in, collating all of your financial information so that they can put the mortgage offer in place for you, essentially. You've got a surveyor who's then going to go out to the property and produce you a report on the condition of the property. So of course, as solicitors and conveyancers, we don't go out to the properties. That is the job of a surveyor, who'll go and look at things like damp proofing, roofing issues, cavity wall insulation, things like that. They will come back with a report as to, you know, positives and negatives in your property. So you can see, as I say, there's quite a few people that get involved when you're buying a house, and it's really great to have certain people in place really at the start. You know, get your broker in place sooner rather than later to have a look at what your options are in terms of a mortgage. I'm sure Claire will agree with me. We hear from clients who say they've made an offer on a property, but they don't have a mortgage offer. So it's, you know, really getting that mortgage offer in place, or at least the agreement in principle in place, is really important.
Sorry, just on that as well, because I know you see deals advertised on the tube or, you know, wherever quite a lot, and people will go direct, but that is, especially if you're doing it the first time, real value in getting a mortgage advisor involved, because they know the market. If your circumstances aren't entirely straightforward, they can really understand it better and advise you. It's not just a case of sort of finding a deal, it's actually helping you work out the right way of financing and putting it together. And also, particularly at the moment, things are changing so rapidly. Lenders are going in and out of the market, rates changing, so they do really speak to them early, and they'll really help you through it, won't they?
Yeah, absolutely, I agree. From a personal point of view, I'm actually buying a house at the moment, and you'd think that I would be able to find my own deal, but having gone through a broker, just it's the best thing that I could have done. It's made everything so much easier. In fact, Claire, you know her. So if we then move on to look at buying schemes, so there are certain schemes that are available out there to help you onto the property ladder. You don't have to be a first-time buyer to use some of these schemes. You can be looking just to move on. So firstly, we'll just look at something that is specific for first-time buyers, and that is the Help to Buy ISA. Now, unfortunately, if you don't have a Help to Buy ISA already, they closed in November last year, so you can't open a Help to Buy ISA anymore. But if you do have one, I would strongly advise you to continue saving into it. Use that maximum £200 a month that you have the opportunity to save into that first-time buyer ISA, because you're getting a bonus from the government on the balance that you have, a 25% bonus. So you can save up to a maximum of £12,000. So if you save that maximum, you're going to get £3,000 from the government towards the purchase price of your property. For just saving your own money, you're going to get that bonus from the government. So I would absolutely advise you to be using those Help to Buy ISAs if you've got them. Other schemes available, then you've got shared ownership. So that means you buy a percentage of a property. So say you would buy 30% or 50%, obviously that's cheaper than buying the whole 100. So you buy 50% and you pay rent on the other 50% that you don't own. Normally you're buying from a housing association, and you then pay rent to that housing association for the remaining percentage that you don't own. And then during your time, you can then buy increments of that. So you can buy in kind of 10% increments. If you've got money available, you can increase the percentage that you own during the time that you own that property. You've got Help to Buy equity loans. Now, these aren't just for first-time buyers, but these are for people who are buying new build properties. So if you're buying a new build property, you can get a Help to Buy equity loan that will cover 20% of the purchase price outside of London, and inside of London, it will cover 40% of the purchase price. So you can see there that there's some real opportunity to get on the property ladder, even in the really difficult London market, with these Help to Buy equity loans. Now, the equity loan sits as a second mortgage on your property. So you take your first mortgage with your regular high street lender, and then your equity loan sits as a second charge, and it runs for 25 years. What usually happens is when people then sell their property, sell their home that they've bought, they will pay off that equity loan at the time, because you'll have made money on your property, you pay back your equity loan, and you move on and you buy your next home. But it just gives you that boost to get onto the ladder in the first place if you're buying a new build property. The other option that you've got available, and I'm sure Claire can tell you more about this, is the sole proprietor joint borrower mortgages, mortgage products that they've got. Now, I really look at those as kind of the old guarantor mortgages. You are the sole owner of the property, but you have somebody come with you onto the mortgage to assist with, you know, affordability and things like that. As I say, I'm not going to pretend to know everything about it from a financial point of view. Claire can tell you a lot more about that, but we're seeing an increasing number of people who are actually taking up those mortgage products, which is great.
Just quickly on that, so yeah, you've either got the schemes that are set up externally by the government to sort of make property more affordable, and then the other side of it is coming at it personally, so from the financial side, and that's where probably I get involved. So I didn't realise you were moving as well, Vicky. So we work with another with a mortgage broker, which is how Vicky and I met, Emma, and so she's the one that would really know that. So people tend to come to me first. I look at the broader financial setting, you know, where is there extra help available? What else have you got going on? And then you go to the mortgage specialist who narrows it down and knows the market inside out. So in terms of getting family help on the mortgage side, so the financing side rather than on the property itself, you have got these ones. So when the stamp duty changes came in and they introduced the 3% extra for a second home, that meant where parents had previously been a guarantor on a mortgage or something, or they'd have their name on the deeds, they would have to, you'd have to pay the extra 3%. So this type of mortgage where they can contribute or their earnings can be recognised in some way, but they're not seen in any way as a legal owner of the property, that's where they're really helpful. And there's a lot of work, I think there's a lot of recognition in the mortgage industry that family help is something that's needed. So, and again, it's moving quite a lot at the moment. So there are some where you can recognise your earnings, where you can put money into a savings account, or third party can put their money in savings, so they don't even have to give it to you, but it's available to contribute. So there's lots of different ways, and then outright gifts, which I know Vicky's going to come back to as well. So,
yeah, I will do. So as we say, those are the schemes that you have available. I will touch on family gifts in a moment. I just wanted to look at stamp duty because we all know the headline, you know, the freeze on stamp duty up to £500,000 till the end of March 2021. So that's not just for first-time buyers, that's for home movers as well. And there is obviously significant savings to be made if you're buying under £500,000. There's also significant savings to be made if you're buying over £500,000. If I give you an example, if you were buying at 600,000, you now pay 0% on the first 500,000, and you pay 5% on the next 100,000. So you're only paying £5,000 in stamp duty, as opposed to £20,000 that you would have been paying in stamp duty. So you can see, even at the higher end of the market, there's still really, really good savings to be made. Now I have to kind of caveat everything by saying I'm not a stamp duty expert. I get asked a lot of questions about stamp duty and I'm not a stamp duty expert. We do refer clients to tax advisors if there is a particular complex issue that needs to be dealt with. Things like multiple dwellings relief, where you can apportion parts of the purchase price to two dwellings if they form part of one title, but it can become very complex. So things like that we do kind of say that you should get some specialist advice. And the reason why I would say that is, for example, a client of mine is currently buying a property where he can get multiple dwellings relief. And by taking the specialist advice, he's saved himself £27,750. So it is really important, as we're saying about talking to the right specialist, to find the right specialist for everything that you're doing when you're buying a property, because you can make some significant savings. So yes, if I go on then to talk really about some of the most frequent questions that I get asked in relation to stamp duty and also in relation to gifts, then I know that Claire will pick up on the family gift point, coming at it from a financial point of view. So A big question I get asked is about the stamp duty surcharge. So if you're a first-time buyer, do you pay the surcharge? Well, if you are buying a property, your first property, and you're going to use that property as a buy-to-let property, you don't pay the surcharge. If and when you then go on to buy your own home, you will pay the surcharge at that time, because they will get you every which way round. Now, at the moment, the surcharge is slightly reduced because of the stamp duty freeze. You're only paying the 3% as opposed to the original banding. But when the stamp duty freeze comes to an end, you will be paying more on that second property. Another question I get asked a lot is, if my main residence is, say, in my husband's name, can I buy an investment property only in my name and make the saving on that surcharge? Now, unfortunately, the simple answer is no. If you are married or in a civil partnership, you are viewed as one unit. So even if your husband or wife owned a property years ago before you met, if you are then going to buy another property, you will pay that surcharge, unfortunately. Another question is, do I get charge stamp duty when I am involved in transferring of equity? Because people often, if they separate, they want to transfer equity. One person wants to buy the other person out, or if you are coming into a new relationship and you're wanting to buy into a property with somebody else who already owns their own home, it's where does that stamp duty liability lie? If I give you an example, say you have a couple who are separating and party A wants to buy out party B, and there's a mortgage over that property. So if the property is worth £500,000 and you've got £200,000 left on your mortgage, where your stamp duty liability is half of the existing mortgage and half of the equity. Add that together and then you put that into the stamp duty banding. So half the mortgage, in this example, half the mortgage would be £100,000. Half the equity remaining in the mortgage, half the equity remaining in the house, 200,000, meaning the stamp duty is calculated on 300,000. So at the moment, you would pay no stamp duty, but previously you would have paid stamp duty. And then the only other thing I'm going to touch on is the family members making a gift. Now, people ask, can they protect money that they are making as a gift? Now, a gift is just that. It is a gift. In the purest sense of the word, you give a gift and you don't expect anything back. It can't be protected. But there are ways around you being able to protect that money. You can't really enter into a declaration of trust, because if you enter into a declaration of trust, if you are gifting more than £40,000, you will become liable for the higher rate of stamp duty, which Claire touched on a moment ago. Where we see a solution to this, particularly if somebody is buying jointly, is if one parent is gifting to one buyer, the one buyer and their partner can make a declaration of trust, protecting that money that's been gifted. What then happens is that if those parties separated, the person would be able to take that money back out of the property. It wouldn't go back to the person that had made the gift, but at least it is protected within the family. And more often than not, that is where people are wanting to protect their money, just within the family unit, as opposed to the money going directly back to the parent or the family member that's made the gift. It does get quite complex in terms of trying to prepare declarations of trust, cohabitation agreements, prenuptial agreements. These are all the things that we cover at Linda Myers. We've got specialists in all of these areas. So there's bound to be hundreds of questions. I know Claire will try to answer some, but if you do have any questions, we'll try and answer those kind of towards the end of the call.
Yeah.
Or you can email me and I can try and respond to those questions for you. But I'll hand back over to Claire to just continue that conversation around family gifts.
Yeah, so the reason, we know how hard it is getting onto the property ladder, particularly if you're in the southeast, and it is disproportionate to your earnings, particularly early in your career. One question I do get sometimes is, where do student loans come in? Basically, any sort of looking at the mortgage side of things again, student loans, if you're paying a student loan, it's considered as a committed cost. So one other thing that's really important to think about, so why planning ahead is really important when you're talking about getting on property ladder. You know, if you're thinking about it, you know, in the next year or even 2 years, talk to professionals already, because you will get value from doing that, because you will be doing things like checking your credit rating is looking good, checking that your outgoings are looking good. You have to show bank statements, your earnings. For example, sometimes I have a client who has been in a job and they say they're going to go self-employed. If you're self-employed, you have to be able to prove 3 years of income, and ideally it has to be rising income. So, you know, you can't have a year on, you know, up here, then a year down here, and then a year up again. They'll average the 3. So there's a lot to consider when you're thinking about getting on a property ladder like that. What your outgoings are, what your income is, what the source of income is. And then if, you know, you're adding it up and you're saying, well, how else can I do it? It's thinking about the wider family who could support you. So I have had a client where parents that, you know, are still quite young, they're still earning, so they can contribute. They don't have a mortgage themselves anymore. They can add on then. But equally, if they have, I do quite a lot of intergenerational work generally, and as you'll probably be aware, the older generations do have more of the wealth. I mean, that's a natural thing, but it also is a sign of our times at the moment. You know, they had a good run with property prices increasing, good salaries, good pensions, and so on. So actually, there is a job to do to pass money down, and it's in their interest as much as it is in yours. So planning that can really, really help. I would say the key people in a transaction, the people it's worth talking to early and sticking with. Obviously, I'd say a financial advisor, but you know, that's a sort of broader thing. Putting it in context is important, but talk to a mortgage advisor as soon as you can, because then you can sort of rule in and rule out what's going to work for you, because you're not going to see your dream home and then find it's not possible, or have to scrabble or put in an offer that's higher than you'd want to because you're not well positioned. So definitely that. And I would say the conveyancer, because they are the person that is going to make it happen. The estate agent, a good estate agent can be invaluable. When I bought this place, I had a lot going on in my personal life, and I basically said to the estate agent, please just make this happen. I'm getting married and going on honeymoon, and I'll be back. And and he was brilliant. But the conveyancer is the person who will make it happen, and you do not want a transaction to fall down because of process. So that's really important, and they will have contacts like surveyors and stuff. Vicky, one question that does come up is, does a conveyancer need to be local? Is that what would you say on that?
From our point of view, I would say absolutely not. And I would think that is fairly similar for a lot of conveyancers. I probably don't see 95% of the people that I act for. We are tooled up here to act for people nationally. We have offices nationally, so if anybody did want to come into our offices, then they can drop off documents and things like that. But we have online systems. We work via email, via telephone. So as to not slow the process down, really, there is no need for people to come into the office like they would have done 10, 15, 20 years ago and sit down and go through all of the paperwork. We report in bite-sized chunks so that it's not a huge amount of reporting at the end for everybody to wade through. We report in chunks via email so that clients can really get a handle on what they're buying early doors.
Okay. So yeah, so I would say, specifically in relation to the purchase, mortgage advisor, a good conveyancer, they're the ones that will make it happen for you. Everyone else, you know, you need decent people, but they will come in and sort of lead the process a bit more. Things do change. It's not static. So if you're talking to your parents, which a lot of people I speak to do, if they haven't bought or sold recently, listen, because they will understand the emotional side of moving, which is tough as well, but it's very likely that the situation has changed in terms of what's available, how to do a mortgage and so on. They don't look, for example, like they used to in the past, at what assets you have outside. It is purely done on income, and if it is not affordable on income, you can't get a mortgage. So that's something that might have changed since your parents looked at it. What else would I consider? I think those are the key things. I did want to just say, I've got this, I don't have to send you a hard copy. I've got a first-time buyer's guide to mortgages. And I think, Vicky, you've got a first-time buyer's sort of guide as well.
Yeah, we have, yeah.
If you want one of those, I'm just going to put our details in the chat, so that if you want to get in touch with us, you can, because I appreciate you don't necessarily want to sort of ask your questions in public, or if you want a copy of those guides, or just to start the process, is that on? So I've also got the details there of Emma, who is the mortgage advisor, who is lovely, and she helps me out a lot with my clients at an early stage, because I'm a big, as you would expect, big advocate of planning and doing things ahead. There haven't been any other questions. I don't know if anyone wants to raise anything now, because I'm aware we're close to the time when you all disappear off for your afternoons. Anything? Callum, any questions?
No, none from me, but we'll just see if anyone would like to ask anything generic in the chat now, but if not, your emails are in the chat. We do have a question from Connor.
Lifetime ISA. Yes, thank you. I was going to mention that. So Lifetime ISA, so Help to Buy came in, and it was like, let's call a Lifetime ISA like a ISA 2.0. It's kind of like the better version, maybe. It's a bit more flexible, so you can take out a Lifetime ISA if you're under 40, you've not bought before. If you do it otherwise, you can use it to save for retirement. It has the same 25% back that you get, sort of the government top up. The difference is it puts the top up in straight away. So if you're thinking of buying in the future and you're using a stocks and shares version of a Lifetime ISA, that's probably better, because you're going to get growth on the government incentive as well. Also, the Help to Buy ISA has to be administered through, you don't get the top up till the conveyancing, is that correct?
That's right, yeah, we apply for the top up for you.
Whereas with the Lifetime ISA, that's, you don't have that pressure of everything happening at once. So yeah, they're really good. The thing I would say from an investment side of things is, obviously, I think last time I mentioned markets are a bit all over the place. If you're thinking of buying in the short term, go for a cash Lifetime ISA. They are definitely worth it. It's up to £4,000 a year, and you can save from between 18 and 40 years old. So it's definitely, or open one from that age group, so it's definitely worth doing. There are more than this now, but I know that Newcastle and Skipton Building Societies both have Lifetime ISAs. You're not going to get a great interest rate on cash right now, but with the government top up, I mean, it doesn't really matter quite so much, to be honest. If you're thinking of buying in more than 5 years, look at investing rather than putting in cash, because for the same reason, you're not going to get anything on cash right now. Is there much advantage to getting on the property ladder ASAP, even if it means living with parents? This is an interesting one, Hannah. So is there a point to getting onto the ladder straight away? A lot of this, and this is where my style of doing financial planning comes in, which is like life first. So people often come to me and say, which is the best thing to do from a financial point of view? And there is usually an on-paper answer, and then there's what's right for you. So the advantage is, right now, this is stamp duty saving right now. The buying schemes are available. So yes, there is that. But with mortgages right now, because of COVID, you used to be able to get like a 95% mortgage if you were just talking general market, as opposed to Help to Buy and so on. Now you're looking at probably minimum 10-15% deposit. So you're going to probably have to have more savings. If you'd already been saving up for stamp duty and you have that, great. The reason I like to stay involved in people's transactions on property is the British psyche is such that we just love property, and it tends to overwhelm everything else. And so I like talking about pensions a lot, because, again, going back to what I started with, time is so important for all these things. You put less effort in if you start early. So it's about getting the balance. Don't let property become all consuming. You have to work at it, but it shouldn't cloud the rest of it. So if you do want to have just like a chat, 15-minute chat about what might be right for you, I can do that thing of just asking the questions that might get you to the right answer for you. So yeah, please feel free to ping me after. I don't know if that answers. Anyone else? We've got a countdown, 6 minutes remaining. Or maybe lunchtime soon. But yeah.
No.
Okay.
If there isn't any further questions, thank you very much, Claire, and thank you very much, Vicky, as well. The video will be up on YouTube for everyone else who wasn't able to join us today. But yes, I think that was very useful, and I'm glad that the people who joined us today found it useful as well. So thank you very much, both,
Thanks.
and hopefully see you
Thank
soon.
you.